Good morning. Welcome to Market Monday for August 26th, 2024. With the S&P 500 stock market back up near all-time highs, it's actually higher than any Wall Street analyst predicted at the beginning of the year. That's right, higher than even the most bullish analyst on the street. Here was the average right here. And remember these guys from a few weeks back? Essentially fired from their high-profile market strategist jobs after decades at the respective firms. Folks, no one can predict the future stock market. All we have is history and context. And history shows us that usually doesn't pay to be bearish, unless you're selling a newspaper or want clicks, that is. Because with 2 or 3 global wars going on, still at the height of one of the fastest rate hiking cycles in history, with mortgage rates spiking to levels not seen in well over a decade, house affordability at the lowest levels since the 80s, who would have expected this year of all election years to be one of the best in history? Did these Wall Street analysts not consider the federal government's 6 or 7% deficit spending on top of an already strong economy? So now here's the same S&P 500 stock market in white. And would you believe it? Just like that, the average analyst year-end target has magically been raised to, you guessed it, the current market price. BOLD, bold. The high is now 6,000 or roughly 7% upside from last week. And we still have some bears holding onto the hope for a 25% crash. This is not FYI for your information, it's FYE for your entertainment. And now we can move on with our lives. Let's take a quick tour around the economy. We have mortgage rates finally coming off of a boil at their lowest rates since May of 2023. And here's the annual year-over-year change down here. We'd love to see this negative trend continue. Gasoline futures trending down as well. Lowest since February of this year. All else equal, we would expect to see lower prices at the pump in the months ahead. Funny how that always happens around elections, no? One thing we've been talking about for the past few months is the widely anticipated first rate cut coming this September 18th. In fact, it's so widely expected, the only debate is whether we'll get 1 or 2 cuts. That will play a huge role in what folks are doing with their cash, as money markets, savings accounts, and so forth have been a safe haven for investors not wanting any market risk. In fact, here's total money market funds way up here. That's over 6 trillion with a T in case you can't see. A huge number for sure. But when you compare it to the market cap, essentially the size of the stock market, money markets as a percentage of the overall stock market, here in blue, is actually not that remarkable. Still hanging out around 13 to 15% range that it's been for some time now. What are folks going to do with all that cash once rates start coming back down? Maybe find some investments for it. Maybe do some home improvements or travel. What are many companies doing with it? Well, buying back stock. Back to the same levels as the record in 2022. Up almost $100 billion over last year and almost double compared to a decade ago. Have a great week.